Better.
That looks pretty tough.
West Hills outreach. About 2.5 hours. And of course, I have an extra closing on Monday.
Good morning, everybody. Good morning, everybody. Okay, at the back, so please close the door. Thank you. You're going to actually hold on, don't break this guy's nose. His nose closed. Coming in, guys. Okay, first I'm going to ask you. First I'm going to ask you is hold your phone with your right hand. With your right hand, not the broken hand. Okay, and then if you have an iPhone on the side, there's a little push it down. If you have a Galaxy, grow up. I'm just kidding. I'm a Galaxy guy. Please put it on mute. Put it on mute, okay? No rings, no nothing, no interruptions. Here's what's going to happen. It's going to be very, very intense, okay? Session, 2.5 hours, non-stop. The only break you guys are going to get for a minute is going to be 10 to 15 minutes, depends on the schedule, how you're going to be ahead or behind to grab food outside and come back, all right? It's going to be like a working seminar, whatever, however you want to call it. So, the first 30 minutes, I'm going to lead. It's all about business 101. I'm going to show exactly all the breakdown. There's a lot of good nuggets over there. Okay, this is more of platter of goodies. It's not going to be let's understand what the cheese is made of and how to make the cheese. It's going to be just the basics of what you need to follow. The big rocks. Every piece over here is a big rock, right? At the end of the day, I'm going to share this whole list a presentation with you. So if you want to make copies, pictures, or whatever, let me know so I'm going to smile properly. But I'm going to email the whole everything whatsoever. At the same time, I'm also going to send you attachments as we have some of them right now. First 30 minutes with me. Then we're going to have Louis. Where's Louis Vasquez? Louis is probably outside. Brilliant tax guy. Louis, say hi to everybody. Okay, he's going to jump at 10:30. I'm going to talk about how you can still save for the 2019 tax filing, which is next year. Some good tricks and tips for you. And we'll talk about the structure between LLC and S Corp. LLC and S Corp. Okay, very, very important. And then we'll take whatever. If it's going to be 5 minutes, 6 minutes, 50 minutes max, depends on the time, to get some food, and then we're gonna have 4 agents over here, extremely successful, driven, hungry. They've been practicing real estate like it's the first day with the hunger, and I look up to all of them, and I learn from them all the time. Some of them speaking the first time on a panel of some kind. It's going to be a great insight to see what those guys are all about. I'm going to ask them a few questions. Then we're going to have a few tips and other pieces about marketing, social media, including a guest speaker for a few minutes to talk about a service that they do at no cost for agents that will help you to elevate your business as well. And we're going to have a first touch afterwards on November 4th, 9 to 10 a.m. Those are Stephanie's sessions. Stephanie, say hi to everybody. So Stephanie Alatore, and it's her sessions. I'm going to be here with her for those 2 sessions, the November 4th, first follow-up for this clinic, and then December 9th, second touch for this clinic. The reason we did this session over here this year in October, not in December or November, so it's going to give you enough time to be shocked and digest and take action. If you're really going to sit down and do your homework, you'll be ready by tomorrow. I promise you. But it takes time. You will have some thinking, maybe digesting, like, exactly what I want to achieve and the commitment level and everything. So it takes a minute, maybe, in other cases. But that's pretty much what it is. Are you ready?
Yes.
Okay, perfect. Let's do it. So I'm going to go over those topics over here. Let's just go through that. Stop me if I talk too fast, because I do. Stop me if you have questions or any comments. What I usually do, and I might do it afterwards because of time, I want to go and then say, like, what's your name, what's your name, what's your name, so you guys will know who's in the room and what's the background, because there's a powerful group of people over here. All of you are extremely successful, driven, hungry, and you're here because you're committed. And I want to commend you for that, and thank you for taking the time. So let's start. Raise your hand if you have a business mission vision. Raise your hand. Okay. Raise your hand higher so we can see who you are. Perfect. Okay. If you don't have one, you have it right now. Okay? And make up one, come up with something, because let's go to Ray. You're the head of Look Room commercial team. Why do you have mission vision?
I'm sorry, the last part.
Why do you have mission vision? Why your team has mission vision?
For us, it's we need clarity and certainty on what each of us are doing, what we're after. And we also need a very strong emotional tie to it, so that it pulls us constantly. So first off is clarity, and then secondly, we tie it to your emotional needs.
Yeah, beautiful. Okay, I mean, you can say, and by the way, that's different than goals. Goal settings, it's different. This is like, what are you all about? Why are you doing this? What are you doing this for? Okay, and it can be a beautiful piece, part of your listing presentation on your website. Any piece whatsoever. It can be maybe, if it's, maybe, cleaner, it can be part of your, flyers, postcards, business cards, whatever you want to do. This is like an example of mission vision of this random company in the Midwest. For example, for a vision. This vision of the Jones Real Estate Group is to achieve the highest possible standards of the real estate market while establishing our agency as the premier and preferred real estate company in Calabasas and surrounding areas. Okay, so there's a clear mission statement, a vision of what you want to be, who you want to be. If you 1 month in the business or whatever it is, or 20 years, you should have a mission vision. I mean, every big company has it, and all of you guys are big companies, right? If you sell 2 deals a year, and your first year, and it was total of like 4 million, some businesses don't sell 4 million volume in a year, right? So, I mean, think about it. You are a big establishment, so think big. Goals. Gotta be SMART goals. SMART goals stands for, as you can see, S for specific, M for measurable. That's the keyword right there, measurable. A, attainable, meaning realistic. R, relevant to what you want to do and what you're doing. And then T for time. You gotta have a time frame. Okay? This is a roadmap for you for anything that you do in life. It can be even personal. So I had a business session with someone, and this person told me, yeah, but one of my goals is to be happier. Nothing wrong with that. So then the next question is, what makes you happy? Anybody want to share? What makes you happy? Gadi, what makes you happy?
Freedom and traveling.
Traveling, right?
Yeah,
and
absolutely.
Okay, so if you can measure happiness by traveling, ideally, how many travels you want to do a year, or you do a year?
At least 2.
2. So if Scott people do 2 major travels a year, hang out with llamas in the Himalayas and whatever, for a few good weeks or months, right?
Yeah.
So he's going to be happy. So you see, it's still measurable. You follow me? So everything is measurable if you break it down like that, right? Now, it's okay even to go to the personal stuff and break them down to be measurable, even if it's with your kids, with your spouse, with your boyfriend, girlfriend, whatever it is, because you're actually building a roadmap to things to be attainable, right? So those are got to be SMART goals. If they're not SMART, covering all those pieces, you're going to run into difficulties, or you're not really vested in what you're trying to do. So don't even do it. The only rent you need to pay is this, right? Rest, exercise, nutrition, and thoughts. That's the only place or rent you need to put your attention to, all right, or the efforts. The reason is that's where you really evolve yourself. That's pretty much to work on yourself, right? And to be more specific, how that works is the 8 gardens of life. Anybody remember from past sessions the 8 gardens of life? Raise your hands. Okay, and I'm gonna send you all that information. So we have 8 gardens. Say again. Fine. So please make comments if they're relevant to the session. Thank you. The 8 gardens of life are covering every aspect of life you can imagine. And you can start with like 2, 3, 4, 5, whatever. Just go for the 8. I say just go for the 8. Might as well, because it's going to create a harmony and balance between all the pieces in life, and you can take it to whatever level you want to take it to. Okay. I have to apologize, actually. Just give me a second, because I don't share this one. Hold on for a second. I have to share this one for a second. I didn't share my presentation. So if you are watching me, it's recording, so it's all good. You're going to get the email. All right, so back to our session over here. That's why I have Kim to remind me. I don't know where she is. Okay, hold on. There we go. All right. Can you text Kim about this for a second? So let me just give you an example. I'm going to jump into that right now. Okay, so this is how it looks like. That's the sheet. There's a whole Google sheet that I'm going to send you, or Excel sheet, whatever you want to prefer to work with. Yeah, I think you have an example, a handout. And as you can see, every area has a defined. Now, I cut it from 10 goals. I use 10 goals for every area, every field or garden, and for every quarter. So I adjust or change or modify for every quarter, right? So, for example, if you go for health and nutrition, so it's whatever you want to measure. I'll give an example over here, for example. Health and nutrition. Okay, so for example, yoga, I'm missing the year, the amount over there, but let's say 52 for the year, which breaks down to, do the math, how many sessions a month, right? How many miles? Look at the, visit 4 cities in the United States. This is for the year. This is for the year. You can do it by quarters, but this is for the year, right? So, and then over here, this field over here, you can see on your side, you can, the year to date. So you can plug it in. It's going to calculate things automatically for you, the colors and everything. So that's where you can track it, right? Overseas, trips, what have you, races, whatever you want to do. Those are my examples, what you see over there from last year. So this is pretty much how you go about it. It's more intense. It's more, once again, you need to be obligated and committed to tie to something. But if you don't have full commitment to something, you're not really going to achieve something. Okay? By the way, how would you know if you're onto something? How would you know if you're about to break through? How would you know?
Obstacles, challenges.
Results, challenges, okay. What else? What does that mean? You said challenges. What do you mean?
Like as you're getting closer to your goal, the obstacles keep coming up even stronger. It's harder as you're getting steeper towards the top of the hill. Kind of like that.
You know that you're breaking through if you're uncomfortable. And if you're, I don't want to say necessarily if you're failing, because it's not, don't expect to fail, even though failure is part of growth. All the time. I mean, look at physics, right? Your skin peels every day, by the way. You just don't pay attention. Maybe you do. Your hair falls, right? Hopefully it's going to stop one time. But that's what the body rejuvenates. right? All the time, non-stop, on a daily basis. That's just basic physics and chemistry. So if you get to a point that you're happy, you're content, you're like, I'm mastering this to perfection, then it means that you capped on your talent or your abilities, and then you have a choice to make. Stay stagnant, but it's never going to stay at the same time. It's always going to regress, right? You're gonna go back, and you're gonna drop in your level of production and ability because you're not evolving, or you need to keep evolving. It means that you live life in misery, figure of speech, for eternity. That's growth. But that's what it is, right? Now, if you take it in a way that you're enjoying to measure it and to achieve and to invest, and you achieve, you support in other people, in yourself, and everything, that's what life is all about. Because with the challenges, you're not alone. And then in the growth journey, you're enjoying the process as well, and the challenges, and you're already kind of like trained for that to some extent, even though every challenge is going to be very different, even if it's the same thing, because you're a different person. Make sense? So I'm challenging you to challenge yourself, to always be different and always look for the opportunity, because that's growth. And if you're stagnant and you're stuck in nothing changing and also nothing working at the same time, so come and talk to me, go to Stephanie, talk to someone that you trust. Work on yourself, because that's what life is all about. Those are the basic things before success. Success comes with that. But you have to put the effort in those pieces first. Make sense? One thing I'm going to share with you as well is the performance sheet. You can use it to any capacity, commercial, residential, new agents, top agent, doesn't really matter. This performance sheet pretty much breaks down all the red fields. It's like the first pieces of fields. They break down all the areas you can change. So you're going to write down, I want to make X amount of gross commission income, gross commission income over here, right? Gross commission income a year. And I want to, my average sales price is such, and my percentage with the company is that, and my commission is still less than 2.5% commission. We're going to break everything down. At the very end, it's going to give you an exact breakdown of what you need to do, step by step, to achieve what you're saying that you want to achieve. It's going to tell you need to sell that much in those many houses, and you need to talk to X amount of people, and so on and so forth. Okay, so it's a very simple yet a very efficient breakdown of how it looks like. That takes us, once you have that information, you're going to funnel all of it to, and you have a sample over there, to the business planning itself. That's the one sheet, the 411. 1 year, 1 month, 4 weeks. Some month break to 5 weeks, kind of 4.5 weeks, so do your math, but it's basically 1 year, 1 month, 4 weeks. And the reason you want to break it down, because you're going to break it down to science of what you want to achieve. What you want to achieve. And it's you're going to give yourself on a civil matter, if you raise your hand like that, back and forth with a little weight, every day, 5 days a week, for 6 months, you're going to grow a muscle. You follow me? Same thing in those pieces. If I have to go back, look. So if you donate 200 homes, Arash, 200 homes a week, this is weekly, okay? And it sounds like, oh my God, 200 homes. Well, break it down to the day, 50 a day, that's 4 days a week. 50, by the way, if you do the math, the average, Valley Street is like 20 to 25 homes on one side, right? And then on the other side is the same thing. So about 2 streets, maybe 3 streets, and you're done. It will take you maybe an hour and a half, 2 hours, fine? So do this 4 times a week, and you're gonna donut your farm, which is 600 homes, once a month. That's a lot. Do the math. 600, right? 800 times 12. Do the math. Okay, so that's how much homes you're gonna donut. That's a lot. Open houses. Sit 2 open houses a week. 1 during the week on a Wednesday, whatever time. Okay, pickup time from school, and then on a Saturday or Sunday. times 52 weeks. That's 104, right? Open houses. Even if you're the worst converter on earth in open houses, you are going to get at least 10 deals from it, right? Who's in open houses over here? Raise your hand. Keep them up. Keep your eyes up if you're doing more than 5 a year. 10, 20 a year, 30, 50.
50 open houses?
Yes,
Yes.
a year. Yeah, a few of you. I
I
know.
don't have a year in yet, but
Okay.
the average will be that.
Julie, how many deals you closed in the last 12 months, roughly?
30.
30. Okay. So, and I can ask more questions. You can be in the panel later today, and we can ask more questions about how many of them are open houses. Okay. My point is, action leads to results, right? So you have to take action. We can talk about those things all day long. Nothing is going to change, right? You have to take action. That gives you the roadmap based on what you want to do, and you're going to break it down scientifically to that piece. You want to attach it to success? Show up every Monday over here. Stephanie's taking the effort. She's waking up at 4:45 just for you to spin on Monday, and then to come, right? Something like that. And then to come here to help you, to hold you accountable. If you have a coach, who has a coach? Raise your hand. Yeah, if you have a coaches. If you have a coach, so they're helping you as well to hold you accountable. So you're investing in yourself, make it happen. This is roadmap to success 101. Questions about that? Any questions? Okay. Now, heavy lifting. This is the next step. Yes.
The one before?
Yes.
411. That matrix, actually the one before that. It's that matrix where you put it and it comes down and that it creates that.
Yes.
If you're going to send that to us,
Yes.
and when we plug the stuff in, is it going to calibrate the percentages of listing sales automatically? Or we have
Everything,
to,
yes.
Okay.
Yeah. It's going to give you the entire information. If something doesn't work, you're not clear, come and see me afterwards, okay? Perfect. I'm going to jump to the next piece, which is the command. I'm going to show really quickly something. Let me just go back and share the other piece over here. Okay, now you see my command if you're watching online. So when you log in, this is what you see. Okay, when you log in, this is what you see. That's your welcome. But I'm going to show like only one thing, one specific thing that you need to focus on. Right now, I'm working together with Stephanie to rebuild our database that I have for a long time, and we're doing everything from scratch. I don't do massive import contacts. I just do one by one. I'll show you one right now. So I'm going to contacts. Follow me. It's going to take me maybe 60 seconds less if I do it like without explaining, but just try to follow me. Contacts. Give me a second. Add contact. And let me harass Ray Rodriguez. He might already be here. So Ray Rodriguez, and then yeah.
Luca Marty.
Luca Marie. Okay. And then random cell phone doesn't really matter. Let's say it's a cell phone. And he's a lead. Okay. Sales pipeline, if it's an existing client, right now it's a buyer or seller that is about to be in transaction or in transaction. Right? And then tags, in this specific case, is an agent. You're going to put an agent, can be buyer, seller, whatever you want to do. The more tags, the better. The more tags, the better. Add more information. Very crucial. Next piece is I can add additional information over here. Home address, just for the sake of it, I'll do the office address. There we go. If you have a mailbox or apartment number, delete it and then add it over here at the bottom. Sweet. Otherwise, you won't find it. And then I'm going to go over here. I'll definitely take the time to do it while I'm building that. And I'm going to find whatever the person's either business page or preferably the personal. If this is a Ray's team, okay. So I'm just gonna take this one and I'm gonna add it over here to profiles. This is Facebook, okay. And then I can add another one like Instagram, whatever you want, whatever you have, okay. The next piece is about. So over here I can add birthday, Ray. September 19th? 14th. That's a great date.
1-4.
That's a great date right there. Not 144. 14. That's good enough.
1994.
He's a baby.
What?
He's a baby. Okay. And then I can keep on going and do home anniversary and other pieces of information over here. By the way, I'm going, guys, so you can listen a lot. And then I can do company name, job title, sales pipeline. If it captured in my pipeline, I'm going to add him over here, and I can add additional information. Then I'm going to press create. I'm not going back. You have to listen. Then I'm going to click create, and then over here I'm going to go to Ray. This is the first one over here, Ray. I'm going to click on him, and then I'm going to see on the top here I have 92% contact health score because I put a lot of information. I'm still missing some piece of information. I don't know which one. Raise your hand if you know what's the best trick to do it, to figure it out. Before that, add yourself first. Add yourself first, go to the same percentage, and then add another piece of information, see if it takes you. If I'm going to add Instagram, you're going to go to 94%. Add home anniversary, 95, whatever it is. Use yourself first as a guinea pig to see what do you want to get from the clientele or from your contacts to go to 100% because this system is going to be incredible. The next thing that we do right away, go to Smart Plans over here, and then click on Add to Smart Plans. And then I have two plans. If you don't see them over here, they're going to be on the library, but I have a few other over here. Mine is already activated. And I'm going to add Ray to 2 right away. One is the monthly, confirm. And the second one, give it a second, is the birthday, because I have his birthday. So every birthday I'm going to get reminders before. Send a note, call him, he's going to get something from me as well. And then the monthly, because I added a specific address, okay? Because I added a specific address, he's going to get, you see Calabasas over here, what I added? He's going to get, right now he already got in his email, maybe in his spam, by the way, a newsletter from me. And every month he's going to get that. Now, if he's going to go inside, you can try it afterwards, and he's going to play inside and check the things. On the timeline over here, I'll see exactly what he's doing, what he was looking at, what kind of properties, everything from A to Z. In the near future, because it's all AI-based, artificial intelligence, with the Kelly app that you should have today or yesterday in your phones, that's going to give you the ability to generate reports and notifications. Hey, Ray Rodriguez been watching 4-bedroom houses for the last week in zip code 9133002. Right? It's going to put you in the tasks over here. Call Ray. So it's going to get there. Bless you. The sooner you're going to implement those things, the better. Any questions about that? Okay. So if you don't have anything implemented in command yet, do it. Doesn't matter what your background is and how many contacts you have or don't have. Yes.
And I'll also sync the notes from, if you have Gmail, I synced my Gmail to that, and every time I emailed my customer, it came up on the notes of the contract.
Beautiful. Okay. That's good to know too. I'm trying to go back to, here it is. Okay. Back to command. I have 2 more minutes. The miracle morning. Who has a morning routine? Raise your hand. Okay. Keep it up. Keep it up. Who thinks that his routine or her routine is perfect, solid? Keep your hands up. Okay, that's good enough. By the way, even if it's not perfect, you should just keep your hands up because you're going to be committed to make it perfect tomorrow, right? So if you take one thing from this session, start with that, the miracle morning, because the miracle morning is pretty much your level of commitment to first of all start investing in who? Yourself. First thing when you wake up. That's your prime time. Now, if you're not a morning person, your problem. Okay? You're in the business of entrepreneurial business. I mean, you have to change and adjust and whatever. There are like 4 personalities, by the way. A wolf and something, I forgot, that is like, you know, if you're like a night person, day person, but it doesn't matter what kind of animal you are. If you invest in yourself first, if it's 4 a.m. or 11 a.m. or whatever, so you take your business first. Then you're able to provide to the rest of whatever it is. So if you don't do that, then you're doing injustice to everybody else. So you have to be extremely selfish for the benefit of others. Starting to take care of yourself first. That's the most important thing. I invest in myself every day before I talk to anybody else. 4.5 hours every day. Every day.
But you wake up at 5.
4. Every day. Okay, it works for me. So that's one important thing. Who knows their disc? Raise your hand. Okay. If you don't know your disc, if you don't know what the disc is, come and see me. I'm going to send the assessment. This is like a sample of an assessment. Someone who's highly consciousness and compliant, into details, but also get things done. This person is amazing. Extrovert with buyers, with people, can make connections and then whatever. It's going to help you out to understand better what your abilities are, instead of finding yourself on things that you're not good at or are not able to understand, like why you're behaving that way. Maybe you're not understanding why that kind of personality is pissing you off, or you're not able to overcome how to deal with a person that is, I don't know, very into the details or very driven or very vocal with the hands or whatever. It's going to teach you a lot of insight. It's going to make you a very, very powerful business person. So this is also a must. I told you, those are all the big rocks. Like I wouldn't skip any step over here until the end of the year to be a whole different capacity next year. With that, 5 minutes behind, Louis Vasquez. Quick question. We definitely want to hear a story about what happened to you in your leg. But do you need to present anything?
No.
Okay, perfect. I'm going to put it there.
So
yours.
classic, on the phone, walking the dogs, and I'm not a multitasker. That was my first mistake. And I went over the curb, and just shouldn't have been on the phone, right? So I'm playing hurt today. So we all have a handout here. I'm gonna go through this pretty quickly. It's 20 pages. A lot of great information for you guys to go through. How many here are newer agents? Okay, great. Good majority of you guys. Does anyone need the next one? Okay, when I started my CPA firm, I started it organically from nothing. I didn't inherit my dad's firm or find a practice. I started it from nothing. I had a guy I played football with in college. He was actually with Keller Williams, Mission Viejo, and he was a top producer for them. He netted about $500,000 a year, and I was able to get him as a client. But we had an agreement with me and him, and he said he was going to coach me. Right? And when I first started a business, I was like, why do I need a coach for? But there's a lot of things that you don't understand when you're first getting into any type of business. Prospecting. What is prospecting? And the importance of prospecting. Lead generation, knowing when someone's trying to pay a premium or very motivated to get stuff done. A lot of stuff I never really picked up on. And then also the disc profile, very important to understand that, and also the person you're dealing with, and then also the 80-20 rule. So really, he taught me everything Keller Williams and Tom Ferry taught him. I learned, as a CPA firm, a professional firm, everything that he was doing as a real estate agent, I was able to learn from him directly. So I really encourage you guys, success leaves clues. Really, just try to talk to people who are making money over here. If that's your goal, implement what they're doing. You'll get to the success a lot faster, and the failures won't be as severe. So I just a quick, little bit of advice on the business aspect, creating a business, okay? So now you're going out starting a business, making money. there is the IRS in the state of California that love it when people make money. They love it. And they love to take as much as they can from that transaction, the money you're making. How many of you guys here love paying taxes? Okay? Well, as a business owner, you have an option that you don't have, that employees don't have. You can pay the government you can let the government really take advantage of you, or you can do things to minimize what you pay the government. You have that availability to yourself. Employees, they don't have that, right? You get a W-2 at the end of the year, right? And you have to report that on a tax return. Now your business owners, we have deductions, legal entities, et cetera, that we're going to go over, okay? How many of you were here on my last seminar a couple weeks ago? Okay. So I'm going to go over a couple of things that we went over that time, but this is actually going to be more, there's going to be some things I did not go over as well, okay? So this will be worth your time. I probably have your attention span for about 30 minutes, before you guys start not paying attention because, taxes is not a sexy topic, if you will, okay? So I'll try to make this as quick as possible, and then, if you have any questions throughout, more than happy to answer at will, okay? First page is our contact information. I don't have business cards. I always lose business cards. I never have business cards on me. If you give me a business card, I'll probably keep it. But I don't know how much money I spent on business cards, and I never got anywhere, so I just stopped spending money on business cards, okay? So my first page has my contact information, our Yelp, our Instagram. At the bottom, there's a partner as well that I just brought on earlier this year, Bradley Baldwin. And he's also a CPA and even has a master's degree in taxation. So this guy loves tax, right? So I just brought him on as a partner. Both of our email addresses are at the bottom. Our firm specializes in real estate. As far as Keller Williams is concerned, we probably have about 100 Keller Williams, a total of 100 Keller Williams agents, teams, groups, et cetera, okay? And then my email address is at the bottom, okay, me and Brad. So I would encourage you to CC both of us, so at least one of us will get back to you if you have any questions, okay? And then you can call or text us on that cell phone number that I have there as well, okay? So that's my business card for you guys. All right, second page is just something that's really useful going forward. Second page is a chart of accounts, 70 of the most common business deductions, okay? 70 of the most common in alphabetical order. This is a great chart of accounts you guys can look at and really want to go through here and circle anything that might apply to you. This is general for businesses. It's not specific to real estate, so you have to kind of go through here and circle what applies to you. But you can see a lot of things are you can deduct essentially, okay? Typically with newer agents, year one agents, they come to me with kind of a P&L report that they kind of put together. I usually give them this and say, hey, it looks like you're really light on your expenses. Go through it one more time with this and see what you come back with, okay? Make sense? All right. Next page, page 3, we're going to spend like 3 minutes on this. This is the tax brackets, okay? One thing I want to kind of go over is kind of dispel a misconception on how the tax brackets work, okay? So at the top, there's 3 essentially breakdowns, okay? At the top, you'll see unmarried filing jointly, or unmarried filing single. Unmarried is you're filing single. In the middle is married filing jointly, and at the bottom is head of household. Head of household means that you're claiming a kid. You're single, but you're the one that provided the majority of the support for the child, okay, at the bottom. I have a comparison between 2017 and 2018 because 2018 going forward, the Trump administration has reformed the tax code, okay? They've really changed things. How many of you guys know the last time they've made an overhaul of the tax code? How many of you guys know the last time they did this? Great, no one, okay? 1986 in Reagan's administration. The last time they revamped the tax code was 1986. They've done it in 2018 going forward. I'm sure a lot of you guys can agree that business has changed quite a bit from 1986 to 2018. Can you guys agree with that? They have done some things that are very, very good for business owners and employees in general. This applies to both employees and business owners. You'll notice on the left-hand column 2017 in comparison to the right-hand column, what they've done is they've decreased the tax bracket. So the 15% bracket is now the 12% bracket. So that's a 3% savings, okay? The 25% bracket is now the 22% bracket, so another 3% savings on that bracket. And then the 28% bracket is now the 24% bracket, so they shaved that off 4 points. And then you used to max out at 39.6% tax rate. They've gotten rid of 39.6, you now max out at 37%. So they've decreased the tax brackets across the board. Each scenario, I have different examples. So at the top is a single earner making $50,000 a year. I have a comparison showing you what they would have owed in 2017. They would have owed $8,153. As you guys can see, with tax reform, they now owe $6,939. You see how there's a savings that you're experiencing. In the middle is a $100,000 a year married filing jointly. Between both spouses, $100,000 comes in. You can see how the tax savings, the lower brackets work there. And then at the bottom, someone head of household, again, claiming a child that they support, they provide the majority of support, $50,000 a year. You can see how there's a savings there as well. Makes sense for the most part? Okay, let's look in the middle. Middle is married filing jointly, okay? A common question I get is it better to file married filing separate or married filing jointly? How many of you guys have ever asked your accountant that question? Okay. In the middle, let's say I made $100,000 a year. On the right-hand side, the 2018 brackets, what bracket would I fall into if I made $100,000 a year? I would fall into the $77,401 through 165. That's a 22% bracket. Make sense? Okay. If I were to make $100,000 and I filed at the bracket above single, what bracket would I max out at? 24. Okay, 24. So in that scenario, what's better? Jointly is 22, right? It's a case-by-case scenario. Another example, let's say I have $250,000 of joint income, okay? And let's say one spouse makes the whole $250,000, the other spouse doesn't work at all, right? $250,000, what's better, filing jointly or filing single? If I file jointly $250,000, I'm in the 24% bracket. If I file a single, I'm in the 32% bracket, correct? So it's a case-by-case scenario. This is a good little chart to look at and compare to see what brackets you guys fall into. Make sense? Yeah. Okay. Another thing, let's look at the middle bracket one more time. I'm showing $100,000 of total income there. Make sense? Look at how the brackets work. The way it works is the first 0 through 19,050, and I have this breakdown on there. The first 19,050 of income, which is 19,050, you only pay 10% on this amount, which is 1,905. Then everything you make from 19,050 through 77,400, and here there is $58,349. I pay 12% on this bracket. So here I would owe $7,002. Then $100,000, right? 77,400 through 165 is the next bracket. This bracket is where the $100,000 falls into. Would you guys agree? This chart is in your guys' paper. We're on page 3. Here I have $22,599 worth of income. If I add these 3 up, I have $100,000, and I show that. Okay. So on this final bracket, I max out at the 22% bracket, but only this amount of income is taxed at 22%. Okay, here I would owe $4,972. Then you add these up, and that's $13,879, which you guys can see. Does that make sense? So effectively, on the $100,000, you only owe about 13.8%, about 14% effectively. But you do max out at the 22% bracket. So that's how the brackets work. It's a progressive system. You're in the 22% bracket, but the majority of your income is taxed at the 10 and the 12% bracket. Does that make sense?
Yes.
Very little of it is taxed at 22%. Okay, so whenever people complain about a tax problem, they either don't have a good accountant or they're using taxes as an excuse for personal finance problems. Okay, so that's how the tax code works. Just a little education for you guys. Okay. Page 4, we're going to talk about some tax avoidance strategies. You said you got 30 transactions this year. I got some good stuff for you. You're going to really like this, all right? So there's tax evasion and tax avoidance, 2 words that sound very, very familiar, okay? One's highly illegal and one is legal, okay? Tax evasion. Not filing a tax return. Okay, that's the most common thing that we see with business owners. Okay, I didn't even know I had to file a tax return. Well, sure, whatever, right? That's the worst thing you can do. The government is very understanding, very, very understanding. Okay, if you run into financial problems, it will settle. If you run into financial problems, you can go on an affordable payment plan. If you run into financial problems, you can even go into a situation where the government says, we won't bother you for a year. Get your finances, get your affairs situated, okay? The worst thing you can do is not file a tax return. That's the worst thing you can do. Because you know what happens if you don't file a tax return for a couple of years and they get your 1099 on file? You know what the government does? Worse than an audit. They go ahead and file a tax return for you in their best interests, okay? So they'll take your 1099 income, they won't account for any expenses, they won't account for your home mortgage interest, your property taxes. If you're married filing jointly, it's much better than filing than single, as we just looked, right? They'll file you as single, they won't take into account kids, serious stuff, okay? Then they can collect on whatever balance they create. Worst thing you can do is not file, okay? File, if you run into problems paying, that's the easy part. Make sense? Okay. Page 5 is just a quick, real fast. There's a new 20% deduction available to business owners. Everyone here, if you're a real estate agent, you would qualify for this. 20% off of your net taxable income. I show an example here. You'll want to take a look at this. Page 5, circle this, look at this. I'll touch on this later on, okay? Okay, so now some year-end strategies that you guys can implement to really minimize what you owe, okay? Page 6. We're on page 6, all right? The first one, and you're going to want to make a note here, you can only do this if you have an S corporation or an LLC that's taxed as an S corporation. That's the only way you can implement number 1 on page 6. And it's called deferring income. Okay, this is a powerful strategy. So what you're going to do with deferring income, let's say I have a $20,000 commission that should be here November, December. Okay, before the year's over, November or December. Make sense? $20,000. I'm going to tell escrow, don't direct deposit my check. Don't direct deposit my commissions. Issue me a check. So rather than cashing that check November, December, and having to pay tax on it this year, you're going to wait to cash the check January of the following year. Okay, you're going to defer the income into the following year. Does that make sense? So I have an example here. If you were to defer $20,000 between the differences, you can see by deferring $20,000 on page 6, number 1, how much would you save? Yeah, so on the left-hand side, let's say you have gross of 100, expenses of 40, net of 60, okay? 22% bracket is what you fall in. Assume all of it's taxed at 22%. I would owe how much? $13,200. Now, on the right-hand side, what we've done is we've earned $20,000 of additional income, but we're going to cash it next year, okay? Put that on next year's tax return, not this year's tax return. Now, gross income, I'm only showing how much? 80 instead of 100, right? My expenses, I still spent 40. Now my net taxable income is how much? 40. And I pay 20% of the 40, which is how much? Okay, so you see how this strategy can be very, very effective? All right?
And is it 20 grand for every 100,000?
I'm just assuming you had another 20,000. Let's say throughout the year I've already made 80, and like in November, December, October even, I have another 20 that I essentially is in escrow or going to close before the year is over.
How much
Just
do you
assuming
defer?
as much as you want.
Oh, wow.
Yeah. Very effective strategy. Very, very effective strategy. I have a law firm, that's another real estate and law firms and medical practices, those are our biggest niches. I have a law firm that, throughout the year they've had a huge year. They made like almost like $3 or $4 million through September 30th. So what I told them to do, and they're implementing it, October, November, December, from all of their clients, for all their retainers and all their income, they're only accepting checks. They're not accepting Venmo transfers, Zelle transfers, they're only accepting checks. They're not accepting credit cards. They're going to hold on to those checks for this quarter. Come January 1st, they can go ahead and process those checks. Does that make sense? So that's the deferring income strategy, yes.
Whatever you defer the next year, add to next year.
It would add to next year's, but what happens if this year I had a big year? Next year, you don't know what's going to happen, right? It's a very volatile industry. So this year, I might be in the 35% bracket, 32% bracket. But next year, what if it's a slow year? I'm probably going to be at a lower tax bracket as well. So yeah, you're essentially, the key word here is deferring. Deferring, okay, not avoiding or evading, okay? Deferring, essentially kicking the can down the road, but this is a great strategy here. Yes?
How does that sort out when the office 1099s you put?
That's a great question. You know what? That's a great question. I'll get right to that. Yes.
I was just gonna say, and then you can just continue to do that, even at the end
It's
of the
something
year.
that you're going to do every
Just
year.
keep doing
Every
it
year. So, like I mentioned, and I have a note here, you can only use a strategy if you have an S corporation or an LLC that's taxed as an S corporation. If we go to the next page, page 7, I have some legal framework here from you from the IRS. This is from IRS.gov, not IRS. Not IRScomputers.com, or this is from the code. Okay. How does it work if I get a 1099? Okay. When you shift from a regular DBA or social, if you're getting all your checks to your social security number to an entity that's an S corporation or an LLC as an S corporation, there is an exception, as we can see here, exception to the 1099 filing requirement. You can see here, exception. Some payments do not have to be reported on Form 1099 miscellaneous, although they may be taxable to the recipient. Payments for which a Form 1099 miscellaneous is not required include all of the following. Payments to a corporation, including a limited liability corporation that is treated as a C or S corporation. You guys see that? Okay.
No.
So you.
I heard
There is no 1099 filing. Okay, just imagine if you had a 1099 Verizon for your cell phone usage. Just think if you had a 1099, all these corporations that you use in your place of business. When you create a corporation, S corporation, Z corporation, or an LLC taxed as one of those, you are now excluded from the 1099 requirement. So if you get a 1099 at the end of the year, if that happens, we simply compare what was deposited into your bank account to the 1099, and we make a footnote on the tax return saying 1099 was received, but it was received in error. Per bank statements, client only deposited this much for the year. So we correct on the tax return. Okay, you can't do that if you can't utilize this kind of loophole if you don't have a legal entity. Okay. Let's go back to page 2, page 6, number 2. This strategy, anyone can use this. Okay, this is called prepaying expenses. Okay. And in this strategy, what you want to do is come November, December, you want to look at the next year, January, February, March. There's recurring monthly expenses that everyone has, right? Your car, your cell phone, insurance. If you have an office rent here, if you have employees, there's expenses that you incur every month, right? So come December, look at the following year, and if cash flow allows, pay for those expenses for January, February, and March of the following year before this year closes. Does that make sense? So we're recognizing the expense this year rather than waiting for next year, okay? And I have an example here. Let's say if you spent $10,000. On the left-hand side, I have gross of 100, expenses of 40, net of 60, 22%, you would owe 13.2. You guys see that? Well, what has happened on the right-hand side is expenses have gone up. So what's happened to net income? It's gone down by $10,000. Make sense? So now I've spent money. I've spent $10,000 that I was going to spend anyways, right? But I now just lowered my tax liability by 22%, $2,200. So I got a return on those expenses. Does that make sense? Anyone can use that. So the whole concept with tax strategies is, as business owners, we're taxed on the net income, right? So we're taxed on the net income. So if I want to lower my taxes, all I have to do is lower my net income. Make sense? W-2 employees, they don't have this luxury, right? So W-2 is what it is. So how do you lower your net income? You lower the income or you increase the expenses, which we just went over. Huh? You can do both if cash flow allows, okay? You need to have cash flow. I can tell you to defer your commission check that's $20,000 and it's going to save you $4,400. Sounds great, right? But if you really need the cash to cover expenses, you're going to have to recognize the income, right? So cash flow has to warrant this, all right? Okay, page 8. Another great strategy. I have about 3 more strategies that we're going to want to implement. Then I'm pretty much going to close it out. We'll take a quick look at how an S corporation will impact you, answer questions, and then get back to it. Okay, for higher earners and you have a kid, consider paying your kid formally through payroll, okay, and shifting income from your social security number to your kid's social security number. Okay, great strategy here. Now, for income earners, for any earners, especially for higher earners, let's say I'm in the 32% bracket, 35% bracket, right? Can I shift some income to my kid that's probably helping me with my real estate business, making an Excel spreadsheet, looking up stuff on Zillow, handing out flyers, doing stuff with your signs. If I shift income from my social security number to my kids, formally through payroll, and have my kid file a tax return, that income I'm shifting to my kid is going to be taxed at a lower bracket if it's taxed at all, okay? So for example, how many of you guys know what the standard deduction is? Everyone gets the standard deduction. You have two options, the standard deduction or I can itemize. And itemizing revolves around what aspect of what you guys do on a daily basis. Owning a home. Make sense? I take the standard deduction, or that's $12,000 per person, per spouse. Everyone gets it. Or if I buy a home, I can deduct my medical expenses, property taxes, home mortgage interest, charitable contributions, all that other stuff, right? Everyone gets a standard deduction. So your kid gets a $12,000 standard deduction that's available to them. So if I pay my kid $12,000 throughout the year, formally through payroll, and they get a $12,000 standard deduction, how much would be taxable in that situation? Zero, exactly. So that's the example I have here. That $12,000, okay? But one more time? One more time? Okay, so everything with deductions and how the IRS works, there's a key term, economic substance. Economic substance has to exist. So if you pay your kid $12,000 and your kid is a 2-year-old infant, it's really hard to prove to the IRS agent that they actually helped you. No economic substance exists there. But if my 8-year-old is producing Excel spreadsheets and looking stuff up on Zillow and helping with my flyers, and I remember when I was a kid, I used to be able to go into a house. My dad's in commercial, by the way. He's been a broker for like 30 years. I used to know to go into a apartment building, and I gotta walk horizontally and diagonally, and I can tell how many square foot the room is, right? Your kid is very likely helping you, so probably 7 or 8 up. Pay them formally so you can shift income to them, okay? How they really audit this, the audit for this isn't very high, but what they'll do is they'll ask for your kid to be present, because kids don't lie. Okay, they'll ask, what are you doing to help your mom with her business? And the kid will be very honest with the agent. Okay, so this is a great strategy. So I have an example here. If you made $100,000 on the left and you spent 30, net income is 70, right? And assume a tax bracket of 25, I owe 17,500. Make sense? Well, on the right, what we've just done is we've increased our expenses by $12,000 by paying our kid. My net taxable income is now 58 instead of 70. You guys see that? Because $12,000 has been shifted to my kid. Assume that seeing 25% on the 58, now I only owe 14,500, and then on my kid's tax return, the standard deduction wipes out the $12,000, so the kid owes nothing. So this strategy would save you how much? $3,000, and it costs you $250 to file a payroll tax return at the end of the year through ADP. It's like great strategy, okay? Number 2 on this.
Can you do it with 1099?
I was just saying.
Yeah, you have to pay them as an employee. You can't pay them as a 1099 contractor because they're not independent. You're supervising them. You're telling them what to do.
So you have to
they
have
default.
on them then.
No, they're actually excluded from all that if you're a kid. Workers' comp, Social Security, Medicare, they're excluded from all of that. So if you tell ADP that, they'll know. We don't do payroll anymore. Too much time, too little fees. So we refer to ADP. There's on the forms of the payroll tax returns, you can check boxes essentially saying that they're a kid. You're excluded from all of that. Great question.
Can you start?
You have to prove the economic substance. So if you have 2, both of them better be doing something for you, okay?
Can you get payroll now and pay for them for this past
Sure,
year?
you can do that. It can be retroactive. Right. You can file one payroll tax return. You have until January 31st of the following year to file payroll for the whole year prior, okay? So the year closes at 12/31, you have an additional 30 days to file payroll. So you can file a payroll tax return for $12,000 to your kid, and it will be retroactive. Great question.
You can include your college kid
As long as there's economic substance. As long as there's economic substance. So you're still paying the kid as a dependent, right, on your tax return. So if he's a college student, he's still a dependent for you. We're talking about also paying them for the services they're providing you.
So instead of paying them rent, I could be paying them economic substance.
Sure. The rent is just gifting them money. There's no. Yes.
Has to be monthly or can
It could be at the end of the year if you want to. Okay. All right.
They have to be dependents.
Great question. No, they can be anyone. They can be anyone technically. If you have I have a little brother that is 25 and plays Fortnite all day long. I could pay him if I wanted to, right? But you have to figure out though, like the standard deduction is $12,000, right? So if you're trying to pay them $12,000 or whatever, but they're making $12,000 from let's say Best Buy, now they're at 24,
Right.
and only 12 of that is non-taxable. Now they're gonna have to pay some tax on the additional. Yeah, but which you can probably cover though.
you can go over.
Yeah. You can go over 12,000 if you want, but I wouldn't go over 15. It's really hard to prove more than 15,000 a year is a reasonable salary for the kid.
So
Yeah.
12 is where they don't have to pay any taxes.
Right.
That's the number one, good figure. Is the $12,000 figure mean no matter who gets it, like, if they're 30 years old?
Doesn't matter, sure.
So then you don't have to have workman's comp because of the dollar figure or the
So
age.
in order to get a workman's comp and Social Security and Medicare and all that stuff, which is another 15% of the payroll you pay them, plus all that other stuff, only your direct dependents get that exclusion.
Okay.
Anyone else other than that does not. So, but you still want to see, if I paid them $12,000 and I absorb those fees for
Right.
Social Security and Medicare, what does that do in comparison to my?
And those fees are deductible.
They are
Because they're
deductible.
on that list.
But just because they're deductible, you still have to spend the money though,
Right.
right? I appreciate the responses. Any other questions? I'll be over here for a little while. Just in the interest of time, let's kind of just power through this. Page 8, number 2. You can now purchase a vehicle over 6,000 pounds, new or used, from a dealership. The new aspect of this whole deduction is that used vehicles qualify. I'll get to you. Used vehicles now qualify. It used to only be new vehicles. If the vehicle is over 6,000 pounds, and I just use this for myself, the vehicle has to be over 6,000 pounds, gross vehicle weight. So that includes the weight of the vehicle, and then the weight of the driver, the people, and then the weight of your equipment. So if the vehicle weighs 5,800, factor in yourself plus your laptop and your signs and all that stuff. We're getting there. So you're looking at bigger vehicles. You're looking at trucks, big 7-seater SUVs. So the benefit of this though is that you can deduct 100% of the purchase price in year 1, regardless of how much money you put down on the vehicle. So what I mean by that is, on this example, let's say over here, not purchasing the vehicle, I made 100, I spent 35, net income is 65, assume a tax bracket is 25%, I would have 16,250. Make sense? Now, if I would buy a vehicle that is $52,000, and then my net taxable income comes down to 13, the standard deduction is 12. So the vehicle's purchase price is what we take into account. So if I bought a vehicle for $55,000, but I only put down, because I have to credit $3,000, I don't care about how much money you put down. How much was the purchase price? And we can deduct that 100%, which for the most part could wipe out your liability.
But it's a one-time thing.
It is a one-time thing, yeah, it's a one-time thing. So this is for someone who buys a vehicle and they keep a vehicle, and this isn't for someone who gets a new vehicle every 3 years. In that case, you want to lease. You can't do it every year, no. Otherwise, the IRS has some smart thinkers that they'll hire people like you and say, hey, this is what we want to do. What would you guys do? They'll do this every year. Okay, we got to adjust some things over here.
Now, if someone is filing joint, can you use it one time on the husband, one time on the wife?
Sure. If both spouses participate in the business, so you want to do something to show your wife is participating in the business. So if you have a legal entity, put your wife as an officer. Great way to if she's passive. But for a lot of people, husband and wife work together in the business. Okay. You got a question?
So this has to be S for C corp?
This is regardless of entity. The only thing that you have to have an S or a C corp would be on page 6, number 1. Page 6, number 1 is the only one that you have to have a lien on.
Just deferring the,
Just deferring, because we eliminated it at 1099.
Just to confirm, that when it's a lease, you can just deduct the whole thing. If
Yeah. Actually, on the next page, I have the difference between buying and leasing.
So can it every 5 years?
So once you buy the vehicle, I've written. Let's say I bought a vehicle for. I have in this example. I bought a vehicle for $52,000 and it's wiped out my liability. Okay. So once I write off the vehicle, I bought it for $52,000. I've written it off 100%, right? Because we can do that. Your vehicle is now worth 0 on the books. Okay. So if I sell it in 3 or 4 years for $20,000, because I don't like it's up, that's profit, it's gain. You have to pay tax on it. So the whole aspect of this is it's for people who buy a vehicle every 10 years and, run the vehicle to the ground. This is primarily for the trucking industry and the construction industry. But there's a lot of people that, do real estate, also flip, have different investments, or you're looking at an SUV, maybe for the family, maybe look at something just a little bit heavier, that 6,000-pound threshold, like that. Great question.
Wait, I know you have a lot more stuff. I'm going to finish with one thing. It's important because people ask me all the time.
Sure.
Do you want Bill to come back to a whole session?
Yeah.
Down the road? Okay, perfect. Okay.
Yeah.
You have to come back.
We can do one more before the year's over.
Sure. LLC. So, how much money do I need to make in gross commission income to justify opening LLC or S corp?
Yeah, great question.
And roughly, what are the costs involved, the expense doing LLC or S corp? And that's the best question for you guys to understand because, everything he told you about the tax, everything, it's all good. Number one, you need to hire a professional. Right now, I'm about to hire him to do my things. Number two is you have to be structured properly. So I think it's really important for them to understand that piece.
Okay, let's go to page 11, and then we're going to the page right after, okay? So go to page 11, and then essentially on page 12, we're going to take a quick look at how the corporation works. Okay, great. This is great for you guys. Those of you who were here last time seminar, we touched on this quite a bit. But let's go to the page after page 11. It's a tax return, essentially, okay? It's a tax return. So it's page 12, essentially, but the 12 is hidden in the 1040 at the top left. So page 11 and the following page, we should all be looking at a tax return. And at the top it says 2018 tax return without an S corporation in red. Make sense? At the top it should say 2018 tax return without an S corporation in red. Okay? Everyone sees that? Line 6 is total income for this taxpayer. Total 6. Line 6. Total income for this business owner that doesn't have an S corporation. What does line 6 show?
125.
So that's the net number, okay? So they probably gross GCI is probably like 250, 200, okay? And then after they probably legitimately spent $80,000, probably have an assistant that helps them, right? We got the net as far as we can get it down to, which is line 6, 125. Make sense? Line 22 is how much Uncle Sam wants from you. $32,000, okay? So I made 125 net after expenses. Line 22 is what I would owe, okay? And the big tax that you pay is line 14. You're going to want to circle line 14. Line 14 is something called the self-employment tax. Line 14. How many of you guys know what the self-employment tax is? You do? Yeah. Do you know what it is?
Yeah.
What is it?
It's the workers' comp.
Exactly. Social Security, Medicare, all the payroll stuff. Yeah. Okay. Line 22. So how much is line 22? Or sorry, line 14. Line 14. How much is line 14? Almost $18,000, right? Whole you would owe the IRS. This is just IRS's bite. This is before California takes their 6% bite. Okay. But you would owe $32,000. On the next page, we have an example. At the top, you can see totally actually with an S corporation. So an S corporation has been implemented here. Line 6 is how much? So nothing's changed there, right? Nothing's changed. Line 6. Line 6. We're still showing the same amount of income. We're just showing the income earned through an S corporation. Line 22 has gone down significantly. How much has line 22 gone down? $10,000. How did that happen? Look at line 14. Line 14 has changed. Okay? Line 14 has gone down significantly. With an S corporation or an LLC taxed as an S corporation, those are powerful entities. One from the legal standpoint, if anything ever happens, you have the legal framework in place. that your personal assets are protected. Make sense? They can only go after the business. All right? They can only go after your business laptop. You know, if you have an employee, okay, go after the employee. Okay. But they can't come after you personally in any type of lawsuit. That's with both an LLC and an S corporation. Now, if you can get an S corporation or convert your LLC to an S corporation, there's also significant tax savings, as you guys are just looking at right now, right? And the tax savings comes from the self-employment tax. You can minimize what you contribute to Social Security, Medicare, workman's compensation, all that payroll stuff. You can minimize it. You're going to get an S corporation, and then you're going to pay yourself some sort of salary, some sort of reasonable salary, okay? All that workers' compensation, self-employment, tax, Social Security, Medicare, it's only applied on the salary you pay yourself. It's not applied on your total profits. That's where the savings really comes into play. When should you consider it? Let's go to the next page, line 6. Line 6 is what? $40,000. Line 22 is how much? Okay, so this is net income of 40. So you're probably grossing about 70 or 80 after expenses were down at 40. Line 22 is $8,000. On the next page, this is with an S corporation. Line 6 is how much? 40. And line 22 is how much? This is when you want to consider it. There's a $6,000 savings you can experience if you're netting $40,000 a year. That's when you really want to consider it, because like Meny said, there are fees, annual fees associated with maintaining the entity. And it's going to be between the tax return preparation, California's fee, some compliance forms. It's going to be between $2,000 and it can be as much as $5,000, okay? It fluctuates. Someone making $40,000, you're probably only going to spend about $15,000 to $2,000 a year. That's probably all you're going to spend. But you're going to save $6,000, as we just saw, right? So that's when it starts making sense. If your net is like 20 or 30, sure, we'll save you like $4,000 or $5,000, $3,000, but you're going to spend $2,000 to save $3,000. Is it really? I mean, it's a matter of how much $1,000 is worth to you. You know, is it worth it? But if I can spend $2,000 to save $6,000 if I'm making 40, or if I can spend, you know, $3,000 to save 10 on that $125,000 example, I think we can all agree that's a sound investment of money, right? Would you guys agree? Yes. Okay. So really, when should you consider it? When you're making $40,000 plus a year, okay? If you're making anything more than that, yes, we should get an S corporation yesterday, okay?
And with that,
can I just go over one cool thing?
60 seconds.
I have 60 seconds. All right. If we can just go, I usually charge for this, but I'll give you guys this one for free because my says this is going to be a well-attended one. Page 10, the biggest loophole that usually firms don't offer. Page 10, this is called the Augusta rule. If you own a home, this is a powerful strategy for you. You can rent, we're on page 10, you can rent your home to your S corporation or your LLC that's taxed as an S corporation. The S corporation can pay you rent up to 14 days in a year, and that money's tax-free to you, the homeowner, and it's also a tax deduction on your entity's return. So let's say you have a home that's worth $750,000. You want to take 1.1% of the home value, and that's the nightly rent that you want to pay yourself. So you can see here, if I have a house that's $750,000, I can literally pay myself $750 for my shareholder meetings with my S corporation, okay? I show here how to document it. I have steps what you need to do to achieve this. This is a powerful strategy that you can implement that, you know, you can literally get $10,000 plus per year in tax-free money, okay? And it's a deduction. So, yeah, we can probably do one more before the year's over. For the most part, that is the meat and potatoes. Quick questions?
750, like what if you live in a house?
Yeah.
No, in the example.
Yeah.
Give it to Louis. Yeah, okay. Here's what's there, guys. We're gonna call you back. We're gonna start here at 12:30 sharp with our panel, which is the next session. So go, there's food outside here ready. We'll get it, get water, coffee, rest of the break, and come back. Thank you. 30 seconds. Barbara, Richard, I know that you see me, hear me, so hold on for a second. I'm gonna go back to you. And what I'm gonna do, I'm gonna right now turn on because I cannot hear you, so give me a second or see you. So make sure that your volume Hold on. Now you can see my face. There we go. Now you can see me. Now I'm going to go back. I'm going to unmute you. I'm going to see your videos. Give me a second. Okay. It's a bit noisy over here, so try to speak up. Barbara, can you speak up for a second? Barbara? I can hear you. Richard, can you try to talk? Oh, hold on. Maybe settings. Try to do it again.
Can you hear me now?
Oh, okay. Now I can hear you. Perfect.
Okay, so in the lower right-hand corner, you have to unmute yourself if you're one of us, and then it says my video's off. But
we good. So hold on for a second. We're gonna stop the recording because we were taking a break. So hold on for a second.